Okay, so starting off on the monthly time frames here, we're going to go ahead and just draw a zone. And this works on any chart that you look at, but once again, it's nice to go ahead and trade the indices because normally they're already at all-time highs, versus like forex. You can trade forex for really fine, but you do have to be a little bit more eyeball particular, because of the fact that they do have many old zones dating back to like the 90s and stuff like that, etc. So it's just been around a much longer time, and the time frames and the price action is just a lot different throughout the years. So yeah, that's why I do like to stick to indices most of the time. So yeah, so this is the ES chart here. So there's going to be three indices. There's going to be the ES, the NQ, and then the YM. And then so I'll go ahead and I'll go through each of those pairs as well. So boom, and then I'm going to go ahead and start off drawing a zone on the top of all-time highs. So we look for breakout continuations because within the market, trying to predict tops and bottoms, it's going to be a lot more taxing on your mental health. You can do it, and some people are pretty good at it, but when you do catch breakout continuations, it's a lot more probable within your favor because the time frames and the confirmation of price action is invalidated depending on which side. So if you're looking for a breakout setup down to the bottom downside here, then it would be invalidated because buyers are no longer present here and sellers would take over and it would dump. Same thing with right here. If price were to buy above this key zone here where these two congruent monthly candles are, also the higher the time frames, then the more confirmations that you're going to be able to have. So yeah, so that's going to be that too. So if you're on the monthly time frame and you see a continuation, then that's going to be a lot more probable, and you're going to be able to scale down to your smaller time frame, and you're going to be able to see how that is and set your take profits. Okay, so boom, and you can let me know if you have any questions too. So after you've gone ahead
Okay.
and found that, and let me know if I'm going too fast. So after you've gone ahead and
One
found,
question
yeah,
before you go ahead. One question. How do I know? I know these two candles here are congruent because the wicks are in the same place.
yes, exactly, because the wicks are in the same place, and this is actually a pattern. This pattern here is actually called a double top, and I'm not a big fan of patterns. I would actually stay away from patterns such as like cup and handle and stuff like that. A lot of that stuff just makes
Yeah,
trading,
yeah,
yeah, like you already know, like trading, a lot of that
yeah,
stuff makes trading a lot more complicated than it really is. Um,
yeah. I couldn't master those. It's a lot of them.
yeah, it's tons. And it's just like when you're reading that, it's a lot easier to just identify the price action. And it's just really just noise, really, to just misguide people, in my opinion. But some of them are useful, and it does make sense sometimes, like a double top. When you see two congruent wicks, because everything is off of candle price action. So if you see two
Hmm.
wicks stop at the same place, and then one day price decides to continue forward past these wicks, like the trade we took on the 12th here, we've been hitting tons of take profit. Boom, 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 and then you can measure out your risk reward ratio. And that's a very nice stop loss. So if price rejects all the way back here, then you know you probably lost, and sellers might take over. But most of the time, it's not going to wick all the way back down, and then you're going to go ahead and reach your take profit. And we're always playing for a 1 to 3. And you can also scale down to your smaller time frames too, and just see how it looks. So you can actually see here. It's pretty cool. So boom, you have Monday the 26th. Price actually went ahead and rose, and then it decided to fall back down. And then we have another area here, Tuesday the 3rd. Price decided to come into the same exact point here. Let me draw some circles. Price decided to come into the same exact point here. And then price decided to fall back down, letting us know that this is a very key area of resistance. Okay. This is the key area of resistance due to the fact that selling is present here. And once again, let me go ahead and type the definition of resistance. Resistance is an area where sellers are present. So resistance is an area where sellers are present, and this is an area where sellers are present because we have two daily candlesticks falling back down. Where a lot of people get misguided, and I'm sure you already know, is like people on the 1 minute and stuff like that just getting misguided. You know, when you're looking at this all day, this is a whole different world versus when you're looking at this. This is what's really going on, you know? Because if I look at the 5 minute
Hmm.
here, my circles are nowhere to be found. I'd probably have to scroll for a long, 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 long while, and then I finally see it over here. People are trading on this and getting lost within this and trying to find setups within this. This is why people are unprofitable because they're living on this. So I don't even really like to have these time frames on here. I think I was just looking at something earlier, if I'm not mistaken. But yeah, I'm glad I had it on there though. But yeah, you already know because you're a pro. But boom, stay
Mhm.
away from the lower time frames. Those are kind of like just
Okay.
mess, and it just really just convolutes your brain, and it's too much price action going on. It's like when you see those tiny little bars, you're gonna feel very, at least me, at least, I don't know, at least me, higher time frame candles are a lot easier to pay attention to because it's just long bars. Versus when you see a bunch of mini candles, it's just a lot more. This is also why I love the alert system too. But when you're actually looking at it, some people just look at the 1 minute candlesticks and they're trading like that, and it's very too much and it's very intense. And it trading
Yeah.
should not be in that intense, in my opinion, because you just find your setup and just wait, like right here, and you don't need that many trades. There's people who make millions and billions of dollars throughout the year and probably don't make more than 50 trades throughout the year, and you don't need that many trades, and it's really about how much money you have. So if you're not losing every day, that's the more work checks you can stack up, put into your account, boom, put 500, catch the proper setup, boom, now that 500 is like 2k, 3k, do that again, now you're at like 6k, and keep doing that, keep doing that, keep doing that, inshallah, God wills, and then boom, you'd be able to change your life just patiently. So right here, just this setup right here, people are going to be able to take this trade. Once again, this is a valid setup due to the fact that, boom, there's also some support being created over here too near this key zone. It's not perfectly on this line, but the fact that I do see some areas of price action there lets me know that is valid too. So buying is present here. And when buying is present here, that lets me know that resistance turn it into, or support turn into resistance. And when you play this way, instead of trying to catch, oh, where's market going to short? Where's market going to top? It's a lot easier to just be patient and be like, okay, market already shorted here twice. Let me just wait for market to just push above it, and then I can just get in.
Yeah.
And it's a lot better on your mental health, and you're going to be a lot better off instead of trying to catch tops and bottoms. Because sometimes price action is going to do this. It's gonna be weird. It's gonna, let me scale down to my 4 hour here. So it's gonna do this. So this is the key zone here, but sometimes it's gonna go ahead and dip down into areas where people are gonna go ahead and get stopped out at. That's why I don't like to really catch tops and bottoms because that's just annoying. But if price pushes above a key area of support or resistance, that's a probable trade. So it's a lot. You're better off losing that than catching a top and bottom and missing it by one or two ticks, and then price reverses in your direction. You're like, dang. Or you might get caught up just buying over and over again and not accepting the fact that maybe you're just losing, and that's not the key
Yeah.
area. So yeah, catching reversals are definitely a lot more taxing, but you can do it. But we like breakout continuations over here, and a lot of the profitable traders that I do study myself definitely do too. So boom. So the daily candlesticks are pretty much my favorite time frame. Scaling down lower is a little bit. It gets a little bit scary just because the daily candlesticks just gives you pretty much almost everything you need. So yeah, you just go ahead and find congruent setups and you just go ahead and take it over. So let me go and swap to a new pair. And then you find your trade, set your alerts every time. You don't have to do it exactly at the line, so you have time, pull up your phone and, boot up your broker and stuff like that, sign in, do Face ID and stuff like that. So boom, set your alerts near the setup, and then you'll be able to go ahead and catch the continuation. You don't have to be a greedy savage, and most of the time, price action does more than what people think. But if you don't want your take profit to be all the way up here, your take profit can be here, and that's fine. Your take profit can be right here, the next daily candlestick that you see above, because some resistance was created here, and then the next opened up and decided to wick above it, and then the next take profit would be right here. So you could take profit gradually. Taking profit
Yeah.
gradually, just locking in profit, it makes it a lot easier because you're like, oh, I already made money on it, so like you're not tripping. Like if you hit
Right.
break even, it is what it is. So boom, because you already got money. So yeah, that's how you detect or take profit too if you don't want the full thing. But most of the time, you're gonna hit the full thing. But within the stock market, really, we never know. So get your money, get in, get out, especially if you win. Boom. Let's go ahead and let's head over to the NASDAQ 100. This is the 100 tech stocks here. This one moves a little bit faster. When it comes to futures, once again, we're going to go over YM. I know that's me and you's favorite. I love YM so much. Like YM US 30, man, that's really where it's at right there. But boom,
Yeah.
NASDAQ 100, blam. So let me go ahead and start off here with the monthly time frame. So let me start by drawing a zone at the very top here. And so this one's a little bit more in uneven. So it's kind of like a puzzle piece you have to figure out. So it's really just about analyzing the candlesticks closely and just drawing your zone and taking your time. And it's really being patient about charting out your setups. So it might look like a bunch of mess, but then once you understand and it clicks in your brain, then you're gonna be like, oh, okay, this makes sense. So I hope what I'm doing right now, this makes sense. So right now I'm just marking out where each of the wicks are. So there's a wick right here, wick right here, wick right here. And I'm just marking out where each of the wicks are. Boom, continuation, continuation, boom, 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 boom. Just like that. So then from there, I'm going to go ahead and do one on the very top of this candle here too. So now I'm going to go ahead and see where the price action is letting me know. So now I'm going to scale down to my weekly and now I'm just going to see what's going on. So let me delete these circles here, get the mess out the way. Okay. So here's where you kind of have to play really close attention. You can also do this on Heikin-Ashi candlesticks too. It also makes it like a little bit easier to just see the wicks and stuff like that because it's all one color versus like kind of like my charts where it's like green, red, green, red, green, red. So like especially depending on your eyeballs, um, yeah, you can see continuations really easy on Heikin-Ashi candlesticks. Um, so yeah, it's gonna just pretty much show you the wicks in a different perspective and the price action in a different perspective. So um, so you don't get faked out as well. So you can use the 2 day here as well once you're done with the weekly time frame here, and then you're going to see where the continuations is. So the price action is down here. So we're going to be waiting for the price action to go ahead and go up because price already did its major opening here. So price decided to go ahead and create its low right here on the 5th of August. So I don't think that price is going to go ahead and dump down here, but just in case it does, we can go ahead and put a candlestick right or put a line right here. And this is going to let me know that this low and this zone here with these three candlesticks, one candlestick, two candlesticks, three, these three zones right here, this is a very congruent zone here. So letting me know that boom, I can go ahead and set my alerts right here for NQ. Doesn't let you do it on Heikin-Ashi, but boom, add alerts every time. And then when price invalidates itself right here on this setup, this is also another pattern right here. And this is going to be a double bottom. So just like we talked about earlier where there was a double top, this is going to be a double bottom, pretty much where you see like two candlesticks decide to hit a congruent area of price action and do the same thing in reverse at the same place, pretty much. So boom, we scale down to our 2 day here and we see that price action decides to reverse right here. So now we have two different trades we could take. So looking at our 2 day here, we see that price decided to reverse one right here. Price decided to reverse right here. Price decided to reverse right here off of these three candlestick wicks, letting us know that this zone right here is very probable because this is the key area of resistance. It's the key area of resistance right here. Boom. So now that we've gone and identified that this is the key area of resistance, you can go ahead and see that, okay, once the selling is no longer valid here, I'm going to be able to just wait and just wait until the price decides to go ahead and break out here. Just like it did over here, price decided to go ahead and create some resistance over here with this candlestick as well. So the smaller the time frame you're going to be able to see, the lower and lower you go, the more and more candlesticks you're going to see, but the more accuracy you're going to be able to have. So it's really nice to scale from top down. It's called top down analysis.
Okay.
Boom. So I got all right. Top down analysis is going to give you guys the highest probability because it's way too many people starting off on the lower time frames, and that's just really throwing you off. Trading is not as hard as many people think. This is really just it. Once you're able to go ahead and identify key areas of resistance and key areas of support, you just wait for that to go ahead and be invalidated, and then you're going to go ahead and just take the continuation in further directions.
Okay.
And that's just going to be it. And you have either side here. So here you have pretty much a double bottom. You see price decided to go ahead and clip itself down here once it decided to break past this point. So it would look like this. And you see how fast breakouts happen? Breakouts happen extremely
Hmm.
quick because people are just like, it's like getting it out the way. It's finally, like people are waiting for this. Now, here's how we can wait for breakouts to be confirmed here. We're going to turn on our tape here. So you can go to indicators, and then we have the tape by Luck F. It's one of my favorite indicators here. Only volume indicators should be used, in my opinion, because anything else is just kind of mumbo jumbo. So go ahead and turn on your volume indicator, and then you can go ahead and see the price action and the orders that are coming in, depending on uh, depending on the time of day as well. So if it's like during the active session, like the morning time, like 9:30 to 11 before EU gets off, you're going to see the tape going wild, especially if it hits a key area of resistance or support and it's ready to be broken or reversals happening. You're going to see a stream, and I wish I could show you, but market is closed right now. But you're going to see a stream of price action coming in, and it's going to be congruent and it's going to be one color. Actually, I can show you Bitcoin.
Yeah, I saw it on last week, and I was checking on the chart.
Yeah, yeah, it's super duper cool. Or maybe mine's just not working
Yeah.
right now. But yeah, it's a very, very effective tool. And then you're just gonna pretty much just see it go crazy. And you're gonna see a bunch of pretty much a lot of people, just people way richer than me, just get in, boom, 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 with hundreds of contracts worth millions of millions of dollars. And when they're buying, pretty much trading is PvP. So we already know when you're losing, somebody's winning. And when you're winning, somebody's losing. So we want to be playing with the big dogs. You want to be playing with the alphas. So we're going to go ahead and get in when they get in. Boom, get in with the big orders. So then the liquidity is there because we want to be getting in with the trend. And you don't want to be
Yeah.
playing against the trend. So a lot of people here, people might be trying to catch this reversal. Some people have this charted out here and they're like, all right, if price reversed here, I'm just going to catch it for reversal again. But it reversed so many times already. So why not just wait for it to break out eventually, instead of just keep catching the
Right.
reversal? So there's a lot of people here who are probably farming this reversal here, but instead of doing that, just wait for price to continue. Because then here your take profit is all over the place when it comes to down here. You don't know where your take profit could be, and you don't know how hard price action could go before it actually reverses. So there's no point to play that game. There's a lot of people who get reversed on and think their trade is right. So just wait for the price action to invalidate itself and catch the breakout setup. Boom. And then yeah, your take profit doesn't have to be all the way up here again. But this was all for higher time frames. So if you want your take profit to be somewhere a little bit shorter, that's perfectly fine. If you want to just take it like maybe you could probably do something like it really just depends on you. Um,
Hmm.
but yeah, but most of the time, the higher time frame take profit, if you see a take profit hit on like the weekly or something like that, it's going to get hit, inshallah. Like a lot of the time, it's going to get hit. So you could probably put it down here next to this support level just to be safe. And then boom, you can go ahead and catch this trade here. And that's very probable. You're not going to lose
Okay.
because price has to invalidate this area eventually. It's not just going to sit here. So even if it takes years and hundreds of years, it's not most of the time, like inshallah. But even if it takes hundreds of years, eventually price is going to either go this way or it's going to go that way. And we're down to wait on either sides. And that's it.
Right.
That's it. So boom, now let's go ahead and let's head over to the YM. And let me know if you have any questions too. And then I'm going to have you go live and then you can go ahead and mark up your setup too, if you want to go ahead and do that. Unless you just want me to share stay online. Up to you.
I have my setups marked up pretty much. I'm just waiting for it to break either to the upside or
Yeah,
downside.
no, that's real. That's real. Awesome, awesome. So YM, boom. YM pretty much gives you the cheat code right here. So boom, starting off on the monthly, we see this all-time highs here, congruent price action. 1 wick, 2 wick, 3 wicks pretty much here on this price action here, letting us know that we can go to all-time highs. So if you want to trade into all-time highs, you just have to draw your Fibonacci tool. Just catch it on a congruent low. So right here would probably make sense because I see some support here, and then I see some resistance here. So once again, resistance turned into support. Boom, so resistance turns into support here. So after you've gone ahead and identified that, and you've drawn your Fibonacci retracement tool, boom, boom, you can go ahead and scale down to your daily time frame, and this would probably be the next take profit here because everyone has to draw Fibonacci. It's just about a matter of drawing it accurately. Boom, boom, have some support here, doom, just like that. Very, very, very simple. But if you didn't want to take this trade, perfectly fine. We can go ahead and identify another one. Um, so let's see if there's anything else we could take up to the upside. Nope. So this would be the most recent trade we're going to be able to take with the most price action. So we missed everything else. So yeah, you're going to be able to take that with the fib marked out, either like this, or you can go ahead and catch the downside setup as well. So the downside setup here, that's going to be probable on the weekly. So I see price action here. And then once again, we're just going to do top-down analysis and just mark out the wicks. Um, and we do have to be very particular here. So I see price action here, price action here. Okay. So line continuations, you definitely do have to pay a bit more of attention to, but it is still possible to trade. Sometimes it's going to be a lot more cleaner than others. So in this sense, we missed the continuation, but this would be somebody's trade. Hence the fact here, and they would have already hit take profit because on the daily you could have used take profit um, right here using our system. So boom, right here, resistance was created, price decided to fall back down, and then we've gone ahead and identified that. We just would have to wait for a price to come over here and invalidate itself once again. So if price decided to go ahead and create resistance here, boom, boom, price decided to go ahead and break out from this weekly candle, and somebody would have gone ahead and caught that trade, but we would have gone ahead and missed the setup here. So the next probable big trade we would probably take on YM though is the all-time highs breakout with the fib, or if you want to catch a
Okay, yeah.
downside, yeah, just to make it a lot easier on yourself and not guess, because you do have to be particular. That's why I'm really a big fan of really scrolling through multiple pairs. You might see somebody like trade gold and then take ES or something like that. It's really just whatever catches your eyeball the easiest. Because as we saw on like NQ and stuff like that, it was a lot cleaner and a lot easier. But on here, this all-time high setup with the fib is very easy and clean too. So that's three probable trades right there. People can all make tons of money on, just depending on how much money and size you actually have.
Yeah.
So yeah, you'd be able to change your life with each one of those trades, just depending on any size. So boom. So yeah, you could do that or wait for a downside setup here. Let me see where it's probable and congruent. This key area here. Once price action breaks into all-time highs, price will probably bounce here again once from one point, just because it's resistance point. But from there, you could probably just wait for a very probable setup like this. Boom, because we have this price action from over here, creating a nice reversal.
Hmm.
And then we have price action here, creating a nice reversal.
So if it breaks beneath that, we can sell.
Yep, exactly. Awesome, awesome. So, yep, if it breaks beneath that, we can go ahead and just take a sell very, 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 very easily. and then you can go ahead and find your take profit. You just have to eyeball it here, and there's some resistance, or yeah, some resistance here too near the zone, which gives us some extra confirmation. Let's see, take profit. Let's see if how that looks right here. Just go down to your 2 day, get down to your daily here. Yeah, I like this zone here because we have the resistance being created here. Boom, wicks falling, wicks falling, wicks falling, wicks falling. So I like this zone right here. You could probably put it a little above too. So yeah, your take profit will be able to be right here. And price will probably dump way down below this, but just for
Right.
the most probable trade, this is still a nice, this is 200 ticks here. Off of one contract, that's a band, you know.
Yeah.
And that's just one contract. So really just depends how much money you have. You'll just be able to go ahead and just get ahead and just staying consistent over and over and over and over and over again. So just
Hmm.
keep catching the setups, keep catching the setups. So do you have any questions?
One question. When you're in the trade, how do you move your stop loss into profit?
Okay, gotcha. So this is why I love trading view most of the time. If you're on knockouts, it's a little bit different. If you're on knockouts, I don't think you can do that. You kind of just have to eat it.
I'm on trading view.
Okay, gotcha. If you're on TradingView, then you should be able to put down your orders. So connect your broker down here, so you can pull up this little menu. Go down to this little shaded line here, pull it up, and then you can go ahead and log out. Connect whatever broker you're logged into, and then go ahead and log into that. And then from there, you should be able to go ahead and put down a limit order. So say you wanted the sales to go ahead and be down here, or you could just get in with the market order as well, or get in on your phone. You have Trade of 8, right? Or which one do you have?
Yeah, I'm a Ninja Trader. They
You're a
said I
Ninja
can
Trader?
log in. It's the same thing, right?
Awesome. Yeah, yeah, yeah. Awesome, awesome, awesome. Okay, cool. So
Yeah. So
yeah,
Trader 8, yeah.
awesome, awesome. So yeah, I like to trade with my phone. So you can actually get in on your phone, and what you're gonna be able to see is it's actually gonna be synced up. Or yeah, yeah, that's really the best way. They do charge you a little bit of a fee though, for it. I believe you can pay with the amount of money that you have in your broker though, which is cool. So if you have like
Hmm.
$100 in your broker, then it'll just deduct out of that. So that's cool.
Okay.
So yeah, if you're winning your trades, it won't matter. So yeah, that should be more of a motivation to like win trades and stuff like that. At least for me.
Right.
Um, boom, boom, boom. So then boom, just wait for the setup to invalidate itself, and then you can go ahead and catch the continuation. And then that's gonna go
Okay.
ahead and be it. Alrighty, alrighty, alrighty. So did you want to see another example, or do you want to go ahead and end it here?
Um, we can go ahead and end it here.
Alrighty, alright. Okay, well, this is Shaniqua, guys. I hope you don't mind if I say your name. This is one of my favorite people to work with. She's absolutely amazing. She's getting it super duper fast, and we're gonna keep catching these continuations, guys. All right, stack mode, Chris. Keep prayed up, keep grinding. I'm gonna catch you on the next one. Peace.